So the question is, why did I get stopped out of my trade when the price action never actually hit my stop loss? Or why did the price jump drastically and it wasn't even a news event? Or why did the spread change throughout the day? Or why did it widen a really, really wide amount? Is this manipulation? Is Maven purposely trying to kick me out of my trades? Well, the short answer is no. Now, first of all, you're going to have to understand how the layering of the Forex market works. Is on the very, very top, we have a liquidity provider, a liquidity pool, if you prefer to use that term. The liquidity provider is directly attached to the level 1 banks, and these guys are basically the ones actually controlling the market data. Now, there are different liquidity providers that a broker could then be attached to, and then the broker is then attached to the prop firm. So the person or the entity that is then in control of these spikes and these movements is actually the liquidity provider. And unless you are a prime connection to a bank, you don't actually have access to this at all. The only thing that we can do on a broker side or as a prop firm side is we can actually add a fee, we can add a spread, for example, or we can add commissions if we want to have a markup on the prices that they feed us. Now, when somebody says raw spreads don't mean zero spreads. This means this is the spread that you're given from the liquidity provider, and then it's just relayed directly as is to the client. We don't add any markup onto that. So at Maven, we have a raw spread for much of our trading data. Now, you might be asking, okay, so why does the spread widen? Well, the spread widens based off of the volume in the market at a given time. So you're really going to see the spreads really widening really wide at the time overlay from day to day. So for my time, I think it's about 1-2 p.m. That's on the western coast of Canada, but that's going to be 00 right at midnight for UTC or the UK time. Depending on where you are in the world, that's going to change depending on your time zone. So the prices jumping wildly around at any given time, this could be from unexpected news events, or it could be at that overlay time where a lot of people are closing their positions, the spreads are widening really, really wide, the volume's getting low, and the liquidity provider still wants to make the profit throughout the day, so they widen the spreads so that they can still continue making profit throughout the entire. Now then, you might be asking, the last question is, why did I get kicked out of my trade? Why? Well, the spread goes on the higher side. So we have the bid and we have the ask when it comes to trading Forex. So the spread is the difference between the two. So the price you see is the bid price. Now the ask price is the spread added on top of that. So when you're seeing those prices move, it's the ask price that's going to hit your stop on a short, and it's going to be the bid price that hits your stop on a long, right? So if you get stopped out and you don't understand why, because the price didn't hit your stop, well, that's because the spread did. It's the ask price, and sometimes that's hidden. So you have to make sure you go into your settings, make sure you show the ask price, and that ask is actually going to change from time to time. So you're not going to be able to look back, and you're not going to be able to see what it was at the time. You're only going to be able to see where that bid was, and then you're going to have to add the spread at that given time. And then if that spread plus the bid equals your stop, that's going to stop you out. Hopefully that answers all your questions, guys. Thanks.